Guys, I've added stock number 26 to my portfolio, Adobe. Wall Street thinks that Adobe's guidance is too low, but frankly, I don't care. When price doesn't reflect true value, smart and disciplined investors step in, and here is why I started my position in Adobe stock. So Adobe just wrapped up fiscal 2024 with record revenue of $21.51 billion, which is up 11% from last year, which is a tough feat for a company with this much revenue. Most companies would pop the champagne with those numbers, but the market, well, it's grumbling. And the reason is Adobe came in with fiscal 2025 guidance falling short of Wall Street's short-term needs and wants. And this tells you everything you need to know. Wall Street cares about the short term, and I want to change that for you. And this is why on this channel, we're trying to teach a principle-driven investing approach where every investment is the present value of all future cash flows, where we're investors, not speculators. We don't care about the short-term price movements. That doesn't tell us if we're right or wrong. We focus on the long-term fundamentals, and this is exactly where Adobe shines. The digital media segment, which includes Creative Cloud and Document Cloud, is an absolute beast, adding $2 billion in net new annualized recurring revenue. Guys, that's a cash flow gold mine. Their gross margin, as you see right here, is over 88%. This is absurd. That means that $2 billion in recurring revenue, that's $1.75 billion that goes to the bottom line to help pay overhead and income taxes. And don't sleep on the Document Cloud. Products like Adobe Acrobat and Sign are riding the tailwinds of digital transformation. No one's printing forms anymore. Everyone is e-signing, e-sealed, and e-delivered. The digital experience segment brought in $5.3 billion, which is over $4.8 billion in gross profit, solidifying Adobe's presence in the enterprise market. Businesses don't just buy these tools, they integrate them into their workflows. Throw in those 30 million Creative Cloud subscribers, and you've got the kind of recurring revenue that makes accountants and investors smile. Now, AI is where Adobe's taking things to the next level. Tools like Firefly are making life easier for creators. And if there's one thing we know about Adobe, it's that they know how to monetize creativity. Financially, they're a fortress. $2.92 billion in Q4 operating cash flow and nearly $20 billion in remaining performance obligation tells me that the pipeline is full. Guys, they're not just winning today. They're setting up for tomorrow, and that's what I love about this company. But here's the rub. The stock's dipping because analysts wanted more. Those greedy assholes wanted more. This is where I remind you that the market is a drama queen. Adobe's core business is rock solid, and the subscription model keeps revenue predictable. So what's my take? Adobe's a business that I want to own, but of course, like everything, not at any price. And guys, I love this quote by Howard Marks. It's not about buying good things. It's about buying good things well. That means paying the right price. That's merging the story with the numbers. That's what we're trying to teach on this channel. Now, the good news is, as the market cries about this, it gives us a cheaper entry point because it pushes the price down. And as an investor, as a principle-driven investor, this allows you to buy more shares of a great business at a better price. It's all about buying when the story meets the numbers. And if the numbers keep going down, that's when you keep buying more. And here's the story that the numbers tell us. So, high level, Adobe's a $200 billion market cap business with a $207 to $215 billion enterprise value, essentially $15 billion in debt. That's what that difference is. And look at this, guys. $6.5 billion in free cash flow last year, $6.5 billion in the last 5 years versus their net income. So everybody in this world is going to focus on this PE, and I'm going to focus on this price to free cash flow. Now, guys, before we go further in the numbers, I always hear people say value investors don't understand growth. They always want things cheap. Really? I just started a position in a company with a 30 times price to free cash flow and a 38 or 39 times PE. Tell me you can do that by buying just something that looks cheap. No, it's factoring in that growth potential. Because I see Adobe with still great growth potential on revenue, coupled with this bottom line gross profit. I gotta think we're gonna start seeing much bigger profit margins. The last 5 years, almost 30%. Last year was down at 25.5%. Guys, this is an incredible business. And I said this in our video in the past about the 33 stocks that I wanna own. Adobe was on there. I look at this as one of the best companies out there in addition to Microsoft in the software world. and I finally got to buy myself a position, and I sold puts at a lower price. But remember, guys, we're here to teach this principle-driven investing process. You apply it to what makes sense to you. It's not about you listening to a video and saying, oh, Paul likes Adobe, let me go buy it. Because guess what? I'm hoping this stock falls. Yesterday, I went on Twitter, and I said, hey, everybody, I started a new position in a company. I won't tell you what it is. Watch for the video. But guess what? It has a 37 PE. And then I also added, and I hope this price goes to 200. That was the amazing part. And I know people out there saying, come on, he doesn't really believe. I really do believe that. Because I look at it saying, if it goes to 200, I can dollar cost average down to $320. Would I buy Adobe today, my full position for 320? You bet I would. And I would love it. Because what would the returns look like in the future? So let's go see what the 8 pillars tell us from the story perspective. Well, all check marks here. ROIC. Look at this. 19% in the last 5 years, 24.5% last year. Buying back shares, I have to look at it and see, are they buying back good shares? $1.65 billion increase in free cash flow, which is larger than their $1.5 billion net income increase on only $10 billion in revenue growth, which is a lot. It's double. But this is what I love. Greater free cash flow than revenue. And of course, their paltry debt levels. And again, yeah, there's X's here, but I just started this position because I'm like, I don't think this is, and you'll see shortly in their stock analyzer tool that takes the numbers and the story together to combine it to give me my buy price. You'll see what I mean by this. So let's see what analysts are saying about earnings per share. Guys, look at this. 1860 to 35, almost doubling in the next 5 years. 14.5, 12.5, 11.5, 16.5, 12, 15% revenue growth. Guys, when a company can increase its revenue and profit at these levels, you have to pay a premium for it. You're not doing the company or your pocketbook or your investment portfolio a favor by saying, no, I want to pay 12 or 15 times earnings for this. No, this deserves more. On the revenue front, look at this. 10.5, 11, 11, 13, 11.5, 11.5, 21.9 billion up to 37.7. Now, again, as I'll always say about analysts, we don't know exactly because analysts they're just as whimsical as the everyday market person. They're not these, everybody thinks these analysts are like these brilliant, they're not. But at the same point, we like to see where the guidance at least is there to guide us. Because if this was 0% and 2% and 3%, unless we have some really good knowledge about why that's not the case, we want to sit there. And there are times when I sit there and say, yeah, I don't believe these numbers. Now, guys, remember, I said before, you take the story, you take the numbers, you put them together, and this is why we have the stock analyzer tool. Because the story will help tell you, hey, what's going on with revenue and profit? What's going to happen there? That's going to affect the numbers you put in there. So let's pull up the last time I did Adobe. And by the way, guys, I'm actually going to share some of our community members' Adobe estimates in here because I really get interested to hear what they have to say. So I did a 10-year analysis. I did revenue growth of 6, 10, and 14%. I did profit margin of 26, 29, and 32. And I'm focusing on free cash flow because of how much higher it is. 38, 40, and 42. Now, 2 earnings multiples, 18, 21, and 24. Listen, I talked to Dalton, who works for us. I found him from the community. He disagreed with me. He goes, Paul, I don't think you're paying a high enough premium for this company. He's probably right. But I sat there and said, let me just be conservative to see. And then a 9% desired return. Now remember, guys, this is no margin of safety. This is what's the intrinsic value. If I wanted to buy this and match the market 9 or 10%, what would I have to pay? But of course, guys, when you buy an individual stock, you must, I repeat, you must put margin of safety in, or else you might as well just buy a low-cost ETF. The hard part is, how do we make good assumptions? Well, the future's unknown, and we're humans. We make mistakes. That's the hard part about investing. So just like Adobe's subscription models give creators and businesses the tools they need to succeed, this stock analyzer tool, this entire platform is designed to give you everything you need to make smarter investing decisions. And I'm going to share with you right now. Here are some of our users. This is Juan R.A. Here are his assumptions, 10, 12, and 14%. Okay. Profit margin, 25, 27. Guys, look how low he went on free cash flow, 30, 33, and 36. I think he went very low there. Now, maybe he's probably thinking to himself, let's merge these together, kind of bring them together. Maybe. He put 19, 21, and 23 and a 9% return, but even then, 584 he has as middle price and 478 on earnings. All right, let's check out another one. A guy by the name of Mousepad. Here are his assumptions, 11, 12, and 13%, profit margin of 28, 29, and 30, free cash flow of 37, 39, and 41, PE and price to free cash flow, 15, 20, and 25. And he actually put his margin of safety in, 11, 13, and 15. I think that's very, very smart to do. We hit his analyze button, and even with his margin of safety, he's got some pretty big numbers in here. 490, 14% potential return. Now, another user, Spike, went a little bit more conservative than I would have done, but I love the fact that he went more conservative. 5, 8, and 11% revenue growth, way lower than mine. 26, 28, and 30, and 33, 35, and 37, way lower on the free cash flow. PE, 15, 18, 21, and then 13, 15, and 17% desired return. Now, Spike, you're watching this. My only thing is, do you really need 15% return to buy Adobe? This is a top tier company. I think that's a little too much. I think you're beating it down. But with that said, hitting the analyze button, look, 208 on the low side, 335 on the high side, 266. You could very well hit that 266, but are you sacrificing too much potential return by doing that? That's my question. So guys, you saw how powerful that was. I only picked 2 of like the 24 people who shared their stock analysis with me. This is what's so great about the community. People comment, they go into this, they have these conversations. This Everything Money platform is designed to give you the tools and the community to make smarter and help your stomach feel better in your investment decisions. And just like how Adobe evolves their tools to meet the needs of their users, we're constantly improving the software to serve you better. So if you go to everythingmoney.com, you'll see that we have a daily waiting list. And that's because our software today includes everything we have to offer, all the tools we have to offer for stocks, retirement, and real estate, in addition to our community with thousands of users growing every single month to chat about investing. We're making a lot of these changes behind the scenes. So the offer that we're offering here will be going away very soon. Now, if you remember, I originally built this software selfishly for myself and my team. And we'd put it on videos. People would say, hey, how do I get that software? And I always say, you can't get it. It's an expensive data feed. Obviously, it sparked the idea of creating the software for the community. And it was an instant hit. I use this to make real estate decisions. I bought in 2024, I bought over $30 million in real estate across 3 purchases using the software up here, using this real estate calculator. But as we've grown, it's become less about me and more about how I can better serve you and the community members. And this is exactly why we spend so much money every single month with developers, data feeds, subscriptions to give you guys exactly what you need. Now, the good news is, these changes haven't been made in full yet. So if you join today, you will be grandfathered in for life with everything. And more importantly, you'll be locked into your pricing tier forever. I'm telling you this now because there's still time for you to sign up. As long as you join our community and software before we make the changes, you will keep your plan even after the changes have been made. So click on the link in the description below. Sign up for our 7-day, $7 trial. That's $1 per day. To get everything you need to make better investing decisions, sleep better at night, and I assure you it'll be one of the best investing decisions you make of your life. So back to my stock analyzer of Adobe. So I hit the analyze button on my assumptions. Guys, look at this. A low price of 380, high price of 960, middle price of 600. Based on the current price today of 447, I can expect a 13% annualized return. And I swear to you right now, I really hope this goes to 200 because I will be buying it all the way down. And I have puts at 425 for a month from now. So guys, if you want to see my top 5 stocks, watch this next video. Thank you for your time.